Unlike classic supports and resistances, these zones change and adapt to market price action in real time. In this video, you will learn what is dynamic support and resistance in trading. I will show you a simple strategy to recognize them and trade them on Forex, gold, or any other financial market. Like this video, subscribe to my YouTube channel, and learn to find supports and resistances that newbie traders always miss. Let's start with the basics. There are two major types of supports and resistances in technical analysis. The first type is called static. Static supports and resistances are strictly horizontal levels or the zones that are fixed. The market price action beyond them does not affect them at all, and as the time flies, these levels and the zones remain stable. Here in gold on a daily time frame, we have a perfect example of static resistance levels and a static support zone. And no matter how strong or how weak is the price action between these levels and the zones, and no matter how long it takes for the market to reach them, the zones remain stable and they do not move. And in any moment in the future when the price approaches the static support or resistance, we will expect the market reaction to that. In comparison to static supports and resistances, the dynamic ones shift with time. They constantly change and adjust as the time flies. That's an example of a dynamic support on Euro Swiss pair. We have a rising trend line. And why do we call that rising trend line a dynamic support? Because with time, this trend line changes. And if the price drops now, we will expect a bullish movement from here. But if the price goes up and we see some extended price movement above that trend line and then a test of that, we will expect a bullish reaction to that trend line from a higher level. That is why we call that trend line a dynamic support. Learn market liquidity, supply and demand zones, smart money concepts, and much more with my book. Inside you will get the essential SMC trading basics and the complete and profitable SMC trading strategy. For more info, visit my website, the link in the description below. And that's an example of a dynamic resistance on dollar index. This falling trend line is a dynamic resistance because with time this trend line moves. If the index goes up now, our resistance will be here, and from that point we will expect a bearish movement. But if the index drops and if the index spends some time below that trend line and then tests that, our resistance will be here, and from that point we will expect a bearish movement. When newbie traders learn dynamic supports and resistances, they usually stop on trend lines, but it is just the beginning. The most significant dynamic supports and resistances will be the zones, the areas that are based on static supports and resistances and dynamic trend lines. Let me show you a real example of a dynamic resistance zone. Let's analyze New Zealand CAD Forex pair. We have a significant static resistance cluster right here, a strong resistance zone where selling orders are distributed. And if we look for the trend lines, we may spot a dynamic falling resistance, a falling trend line that perfectly match with our static resistance zone. In such a case, we should draw the dynamic contracting resistance. That will be the area that will be based on our trend line and on our static horizontal resistance. And when the price approaches that, we will expect a bearish reaction from that zone, and we will expect that selling orders will be distributed within that, and that will be the area for us to sell from. On the EuroCAD pair on a daily time frame, we got a static daily support that was broken. We got a significant support area that was violated and that turned into a static resistance after a breakout. At the same time, we have a dynamic support, a rising trend line that was violated and that turned into a dynamic resistance after a breakout. And the trend line and the broken static resistance will compose the expanding resistance, the expanding dynamic resistance that will expand with time. That will be bigger with time. That will be the zone where the selling orders will be distributed, and that will be the zone from where a bearish movement will be expected. Let's discuss how a dynamic support zone looks. Let's analyze pound New Zealand. We have a static resistance zone that was broken and that turned into support after a breakout. But also we have a falling trend line, a dynamic resistance that was broken and that turned into a dynamic support after a breakout. And that is a rare case when a static support matches with the dynamic support. And in such a case, we should unite them, and both structures will compose the dynamic demand zone, the dynamic support where buying orders will accumulate, and that zone will expand with time. And we will assume that the buyers will place their buying orders within that entire area, and from that entire area we will expect a bullish reaction. On a pound Swiss pair, we have a significant static support. It was a static resistance in the past and it turned into a support after a breakout. But we also have a dynamic support here. This rising trend line is an important dynamic support that the price perfectly respects. And the dynamic support, the trend line, and this static support will compose the contracting demand zone. The zone, the support zone that will contract with time. With time will become more and more narrow, and within that zone we will expect the accumulation of buying orders, and from that zone we can look for buying. Next time when you execute a support and resistance analysis, try to find the dynamic zones. You can find them on any time frame and on any market, and they will completely change your perspective on the market. Let me know traders in the comment section if you have any questions. Learn market liquidity, smart money concepts, and much more with my book, the link in the description below. Also traders, please watch my other videos.